got lots of phone calls lined up for our guest today. He's Eugene Profit. He's president of the Profit Funds, and his value fund, the ticker symbol PVALX, is up more than 5% year to date, which is far outperforming both the S&P and the NASDAQ and the Dow for that matter. We are going to take our first caller from Michigan. Brett, you're on the line. Thanks for calling.
Yeah, thank you for taking my call. I would just like to know your long and short-term outlook on Palm.
Brett, yeah, Palm is one of my favorite stocks. It looks like it might become the operating system for the wireless age. Today's announcement, they got a low-price Palm device in for new customers. I think it's going to be a great stock going forward, and I'd be a buyer here.
Okay, so at 38.5, it's definitely at the low end of its range. You'd buy in there?
Yeah, I think, well, you know, you had a big run-up with the actual IPO from 3Com last year, and there was a big sell-off. And I think it's a very high PE stock, but it's a stock where the earnings are growing at a rapid rate. And what you might have is Palm might actually be the Microsoft of the future. You know, we're going to a wireless age, and if that in fact comes to bear, then Palm is the operating system that Handspring Visor uses, that Palm obviously uses, and a lot of programmers are making software for the device.
Okay. Let's head down south to Mississippi, and we've got Mike on the line. Hi, Mike.
Hello.
Hi, Mike.
Hi, Eugene. I'd like to ask you about Anheuser-Busche. Do you think it's a good stock to buy, and do you think it will split soon?
Yeah, I think Anheuser-Busche is a great company to own here. It's had a pretty good run over the last quarter, and I kind of made a joke about it. We owned it in one of our portfolios that maybe some of the internet investors would drink a lot of beer to drown their sorrows. I think going forward is a great return on equity. The price-to-earnings ratio is below its growth rate, and I think you'll do well to hold this stock here.
Now, this stock is right near the high, 52-week high. It's about $3 off that.
Right.
Does this still fit your criteria for value?
Well, it really, in looking at the growth rate and the return on equity, it would fit into our pricing model. But it's a security that I would like to sell off for $1 or $2, maybe buy it on the day that the market is down, because all stocks go down when the market's down. But it's still a security that I wouldn't mind owning here.
Okay. We've got Connie on the line. Connie, are you there? Go ahead, Connie.
Yes, I'm here.
Hi there.
Thank you for taking my call. We've seen the hit that Dell's taken in the last couple of weeks.
Sure.
What do you think about the future of Compaq in the long and short term?
Well, coming from Texas, Connie, I think you probably would like Dell, but I really think in the short term, Dell might perform better than Compaq. In the long term, I would be a buyer of Compaq here. I think what you see with Dell is they're trying to get into the enterprise and network computer arena, and they're new in that arena, whereas Compaq already has a foothold there. Compaq's meeting their earnings expectations. You have a lower price-to-earnings ratio. In a 3 to 5 year window, I'd prefer to be a buyer of Compaq.
Do you think that Dell is really still a victim of overblown market expectations? I mean, they're reporting this week. Last week we had some brokerages coming out saying they're going to miss revenue targets, but 30% revenue growth. I mean, that's not too bad.
Right. I think you're correct. I think that Dell is a victim of the market's misperception right now. I think you're going to see the box manufacturers, the Dells, the Gateways, the Compaqs, do extremely well over the next 6 to 12 months for this reason. The semiconductor industry has been on fire. You're starting to see some host adapter manufacturers come out with strong earnings, and both of these components go into these PCs, but you haven't seen that type of move in PCs. So I think that it's a nice place to put some assets right here.
But you would favor Compaq?
I would favor
over
Compaq,
Dell.
correct.
Okay. Let's head out to the Midwest and Illinois. We've got Noreen on the line. Hi there.
Hi, how are you?
Just fine, thanks for calling.
That's good. Thank you for taking my call. I have a question about Intel. We've been very conservative in our stock choices and haven't invested in anything technology. Would Intel be a good thing to get started with?
Well, I think we own Intel in our portfolios, and the semiconductor industry, as I was just saying, has been on fire, and Intel has had a big run-up here. I think that I would let it back off a little bit, but I would certainly be a buyer of the security long term. If your horizon is 5 years and not 5 minutes, you could go in and buy it today. But if you're a little bit more short-term oriented, you might see it decline a little bit just as the entire semiconductor industry sells off. But long and short of it is, Intel is one of those grand stocks that are core holdings, and I would initiate a position if you don't own one.
Okay, let's head on down to Georgia. We've got Tom on the line. Hi, Tom.
Hi, thanks for taking my call. Long term, I'm thinking like 6 months. In comparison with Palm,
Yes.
AOL and WorldComm,
Sure.
as value buys right now with a potential investment of about $50,000, where do you think I'd realize my greatest gains on these 3 stocks?
Well, if you give me a little bit more time than 6 months, I think I would prefer AOL and then WorldComm and then Palm. And the reason is this. I think in the case of both AOL and WorldComm, you've had much larger sell-offs, and there are much less expectation in both of those securities than you would in Palm. However, AOL still has a massive subscriber base. WorldComm still has a great growth rate. They have a great group of assets, yet it's selling at the level that it was selling before the Sprint merger fell apart. And if you go back a few months beyond that, you'll see that the initiation of WorldComm's sell-off was the announcement that there would be a merger with Sprint, which has since unraveled. I think in both of those scenarios, over a 3 to 5 year period, you're going to do extremely well. You might double your money in both positions. Palm is going to be a lot more volatile. If it becomes the operating system, you're going to make a lot of money. But if you're talking about 6 months, it could be up or down. I think that you might want to expand the horizon a little bit.
It's interesting that Tom's referring to long-term as 6 months
Sure.
here, right?
Right.
You were looking more to 3 to 5 years
Sure.
for individuals. Do you think that that's a healthy way for individuals who are planning, for longer-term investments to think, even though the temptation in this market
Right.
is to think shorter term?
Well, that's the way I invest, Sasha, and I think that the focus has become very short, that there's so much news out. People are paying attention to their stocks minute by minute, day by day, instead of year by year. And I think that when you do that, you miss a lot of value in the marketplace. For instance, you can find great companies like WorldComm that in 3 years will do well. But if you're looking for a 3-month time frame, you probably wouldn't be a purchaser of WorldComm. But that's how we've made our money. We don't care whether our return comes in 3 months or 3 years. We look for companies that have sold off for one reason or another, that are still franchise businesses that will come back into favor.
Okay. Well, so far, it's definitely working for you. We're going to take more of your phone calls and emails for Eugene Profit. His fund, Profit Value Fund, it is up more than 5% year-to-date, outperforming the markets. We'll take a short commercial break and come right back after this.